$1 trillion man back with you guys. We're getting into a very scary situation right now. I'm sure you've heard about the Silicon Valley Bank collapse. This is a new era in the financial markets. That was the canary in the coal mine. In case you don't know, Silicon Valley Bank is actually a pretty small bank, insubstantial in the scheme of things, but that was really at the heart of the startup Silicon Valley ecosystem, taking in deposits from all these startups out there. Yeah, they're lending money to some of these companies. They're an important player in the ecosystem. They just collapsed because well, it's got a lot of problems. The point is this: um, it's not so much the collapse of the bank. What it is the collapse of confidence. That's right, confidence. Confidence was shaken up. There was a run on the bank. A lot of their depositors pulled money from the bank because hey, they knew they were gonna go bust, right? So Silicon Valley has been shaken up, and I believe this is gonna spread to the really. It's the start. It's just what happened. Remember, Bear Stearns collapsed in 2008, and 6 months later that led to Lehman. But that was the early warning sign. What does this mean for you? Why am I telling you this? I don't give a shit about Silicon Valley Bank. I do care about the penny stocks that I'm working with, some of my potential 10 bagger stocks. And what this means is this: we're going into a new environment. Right now, you cannot afford to buy, you cannot afford to own penny stocks that are overvalued. You can only buy stocks that are trading at dirt cheap valuations. I'm talking about $5-10 million valuation if they're purely a story concept stock. Or if they have real revenues, you got to be buying them at like 1x, 2x revenues. The multiples on valuations are getting crushed. A year ago, 18 months ago, we had stocks trading at 10 times revenues, 20 times revenues. Hey, whatever, it doesn't matter, right? My friends, those days are over. We're in a new environment. We're in a new environment, and this means you gotta be very, very conservative. You need to be buying stocks like AIMLF, which I've been promoting. It's an AI stock. It's a concept stock. Look, it's an early stage company. They have a patent that potentially covers, $20 billion wearables market. They're in the AI business at the intersection of AI and health tech. And here's the good news: there's multiple shots, multiple catalysts in place for this to be potentially, our next 10 bagger. We've had already 10 of these stocks that have gone up between 1,000 and 5,000% in the last couple of years, right? So I think this could be my next 10 bagger. By the way, they're a client of mine. They're paying me money to get the word out on their stock. I also own 1 million shares of stock that I paid for, right? Um, and Here's the thing: this thing is trading at a valuation. I was saying 5 million. It's actually less. It's a couple of $1 million. It's like 3 million, which is like free basically. Now, if you read my book, 10 Bagger Blueprint, you would know that that's the sweet spot. That's the time to get in. Getting into these stocks when they're dirt cheap, when they've been de-risked. So you have minimal downside, and the upside is blue sky, totally blue sky upside. If you look at some of our big winners in the past, like CBDT, which ran up 5,000%. Yeah, it's a stock that I introduced at a nickel, and everybody thought it was a scam at a nickel. Everybody thought it was a scam at a nickel. And you know what happened to that stock? Within 6 months, it was trading at $2.50. That's right, it was a 50 bagger, 5,000% increase. By the way, I've had other 100 baggers. I've had 100 baggers over the course of my career. It's not a big deal. Um, I'd like to do one more 100 bagger, then I could retire. But this is too much fun. So anyway, guys, bottom line is this: you got to be very, very careful. You got to be very careful with these stocks. Don't get scammed. Don't buy high valuation stocks that have been overinflated. You got to be super conservative right now. You got to be super conservative. 5 million, 10 million is the max you should be paying for stocks that are story stocks. Okay. Now, look, if the guy's doing 25 million in revenues, they're generating, 5 million in income, EBITDA, whatever. Yeah, you could pay 50 million, 100 million, maybe. Actually, no, 50 million. You could do 10 times earnings or whatever, but not more than that. Don't be a sucker. Don't get scammed. By the way, get my book, 10 Bagger Blueprint. It's an Amazon #1 bestseller. Prices are going up. Supplies are limited. See you at the top.